Things are looking a lot better this year for our crop farmers, our corn and soybean producers, as they entered the fields. If you think back a year ago of what we were looking at, the outbreak had just come out, the prices had plummeted. We were looking at ethanol production that had dropped, exports had dropped, prices were just terrible. And so as they were entering fields, profitability did not look good at all. This year it's a much different picture. We've seen prices over the last 8 months increased dramatically. They haven't been at this level since probably 2013, both corn and soybeans, but also wheat, sorghum, and some other commodities. So as they enter the fields, profitability is looking a lot better. And we did some numbers, some estimates based on UNL crop budgets that they put out every year. And on irrigated production, corn and soybeans, maybe looking between $360 and $450 net returns per acre. On dry land, maybe around $200 per acre now. But we didn't account for the increased costs that fertilizer prices or fuel costs that they're seeing this year. But still, as farmers enter the fields, it's looking a lot better this year. Coming out of last year, one of the bigger concerns was farmers showed some income last year, but a lot of it was due to the COVID assistance programs. And we knew that wasn't going to continue this year. So there were some concerns about how farmers are going to make money this year, or where the revenues are going to come from, frankly. And this, I think, alleviates a lot of that concerns as farmers are entering the field. There might be some farmers that still have last year's crop production, that they're still in storage or still at the elevator. At this level of prices, if you could lock in a profit, which it looks like you can, it might behoove you to think a little bit about selling some of that. But then moving forward in this year's crop production, I would definitely take a look at the prices that are out there right now. And again, if you can lock in a profit, maybe pricing some of it. And I know some consultants and marketing experts are telling farmers to even look ahead to maybe 22 crop production, because again, at these kind of price levels, they're not seen very often. And if you can lock in a profit on a portion of your production, that's never a bad thing. One of the market movers in the crop prices since last August has been China. And when you look at China's purchases of corn and soybeans and sorghum and pork, they just have a voracious appetite right now. They're just taking all that we can produce. And so the USDA is forecasting a low stocks-to-use ratio as we emerge from this crop year, which means we don't have a lot of supply. So prices are reflecting all that. But again, China is the big driver. If you look at this marketing year, I think they're projecting our exports to China to be up 43%. Compared to last year, and our soybean exports thus far this year have tripled. And so they're a big driving force behind this, which is good. That's the market at work. One of the things that, if I were a farmer, that I'd be thinking about a little bit is you have one market, and it's a big market, no doubt, and they have a lot of market presence because of that, that's driving this. And so if something changes in that one market, things can change overnight. And particularly when you look at China and the United States and some of the political tensions that are there now, this all plays in that relationship. And if a spark would go off and cascade out, it could have implications for the market. So while the market fundamentals are very good right now, both on the supply side and demand side with China, as we found out in the past, that can change in a hurry. And I think about that as you're thinking about your marketing plans and how you go about marketing this year's crop and price last year's crop too.